Hello and welcome on this new weekly market analysis video from Xtreme Trader. This is Salah speaking. Before we start, please don't forget to hit the like button and subscribe to the channel, and of course share the video. So of course, my friends, I'm totally aware that last week actually was really bad. Almost all of the signals which I have sent last week have actually went badly. Now, of course, I'm not here to defend myself or to blame the news, but I'm just saying that it was really hard to analyze or to predict the market last week. It was actually loaded with the news, which has, of course, affected the market and, of course, changed the direction. Starting from the pound, Bank of England statement, and, of course, the interest rates, and also the from USD banks. Of course, we had the from USD, of course, I mean, we have the unemployment rate and non-farm payroll. Actually, a lot of news has actually affected the market and caused the market to go in actually different directions. Again, I'm not blaming the market at all. I'm not blaming the news. All I'm saying that those who have been following me for many years, they know that it's rarely happening that I actually fail my analysis. And of course, I have seen in the comments, someone said that I'm fully relying on the trend lines and support and resistance, and of course this is far from the truth. Let me show to you what I'm doing behind the scenes. So actually, before we start analyzing the market or the weekly analysis or the midweek analysis, I always go to the trading view and I'm analyzing the DXY, the dollar index, and based on it I am fully relying my analysis. Now of course this is from technical view. As you can see, the DXY has finally made the strong bullish breakout from Fibonacci 61.8 retracement, indicates that the market, or actually the dollar, is actually going to continue the rising. However, beside that, I'm also analyzing the dollar. I'm reading some articles here and there. This is, of course, one of them. If we press the back button, of course, you will see that I'm reading actually multiple articles about the dollar, how it's what's gonna happen with the dollar, how it's gonna be reacting this week, what are the predictions on the dollar movement. So of course it's long process, it's not easy as you think, and of course in return all I'm asking you, my friends, is to hit the like button and of course subscribe to the channel to appreciate the hard work that I'm doing. Let me just tell you something. Right now it's almost 5 p.m. Dubai time. Actually I have started almost at 2 p.m. almost 3 hours right here. I'm sitting right here analyzing the market and making sure that this analysis hopefully is gonna be accurate. Of course, if it has failed, that is of course normal. There is absolutely nothing guaranteed in this industry. Forex, my friends, is not a 1 + 1 = 2. That is not how Forex works. We are doing the best we can to analyze the market, and based on it, of course, we are hoping for the best results. And before we start analyzing the market, I want to say, guys, that the channel is almost dying right now. The views are almost the same, but the comments section is really dead. I would like, actually, guys, if you can show some contribution right here to add your comments, make the channel alive again, and just share your ideas and your common questions, or even your opinion. Even if it's not good, I don't mind at all. Just please make the channel alive again, and hopefully we can see more views than ever. So let's now begin the weekly analysis, and let's begin with the Euro USD. So of course we have to get rid of the old signal. It's no longer valid for the buy at all. Let me just delete the old signal and get rid of all the lines, and let's see now what we can do next with this pair. So moving now to the weekly chart. Now on the weekly chart, what we can see right here, my friends, is the market has actually made here the bearish breakout almost from that level of a resistance right there, exactly at 1.10305. Now if we look at the bigger time frame, we can see that right here it was also a strong key resistance level, it was also a strong key support level, and lately it was a strong key resistance level. Now this current price action right here, which has appeared, as we can see right here, we had a strong bullish candle at the beginning of the month, or actually mid of January. Then we had here late of January, we had, or actually late January, we had another smaller blue candle, and then the third candle was actually much smaller. So you can see the difference between the sizes of the candles. It was big candle, then slowly getting smaller and smaller. Then finally the last week, it was a strong bearish candle. That means that the sellers are actually pushing the market right now, and the market seems like it's going to continue the fall, at least to reach that level of a support before it's going to make any further movements. Therefore, most likely the Euro USD still has about 160 pips more to go. So moving now to the daily chart. Now on the daily chart, what we can see right here is actually a strong key support trend line, which actually has been breaking out from. Of course, in the middle, we had here that fake breakout, but we can see that the market on the daily chart has actually been able to respect that level of a support trend line multiple times. Then finally, we had here the bearish breakout from that level. Indicates that we can actually start shorting the Euro USD right on the retest of that level of a trend line. Now, of course, we cannot decide the exact entry on the daily chart. So that being said, let's now move to the 4-hour time frame. Alright, so here is of course the 4-hour time frame, and what we can do right now is finally identify where exactly we can start shorting the Euro USD after confirming the direction on the weekly and daily time frame. Now, of course, what we can see right here, of course, my friends, is that triangle. As we can see, this is where actually the market has made the bullish breakout from. Actually, let me just draw it again, make sure it's clear for you. So we had right here that channel, as we can see. So we had here the fake breakout from that channel, and then the market has went all the way, broke out from that long-term channel for the Euro USD, and right now the bearish breakout has begun. Now, as we can see, we're having right here a strong key support level, which indicates that on the opening of the market on Monday, we can actually expect a pullback, but not for so long, because we're actually going to start shorting the market right on the retest. Most likely is going to be right here on the nearest strong key support level to the entry. Now, let's draw the support trend line here in accurate way. So what I'm going to do is simply draw it just like that. Like that. So right here we can see that this is of course the lowest level of that support trend line. This is absolutely the lowest level. So the market, if it's going to make a retest, it's going to actually reverse upon the pressure from that support, and then going to continue the rising and retest the broken level of the support trend line exactly right there. Now we need to find the horizontal level of the resistance where actually we can rely on that level for a strong pressure to push the market to continue the fall. Exactly right there. Let me just be more accurate. Exactly, just right there. This level, my friends, of course, it was a real level of a resistance. As you can see, it was a real level of a resistance. Then, of course, we had here multiple attempts of a fake breakout. Then it became a real level of a support for only one single attempt before the market made another bearish breakout from it. Indicates that selling at 1.08305, in my opinion, is going to be a good idea. We have to wait for the market to rise for about 37 pips before we can start shorting it. Now, if the market is going to make a bearish breakout from that level and continue the fall, most likely it's going to continue the fall till it reaches the level where we have begun drawing the support trend line exactly on that level of the support. That means that this level of the support exactly right there at 1.07146 is going to be our target, which means we're actually aiming approximately 114 pips profit from this signal. Meanwhile, the safe zone shouldn't be ranging higher than this level of the nearest resistance to the entry at 1.08870, which means the safe zone is ranging for about 55 pips against 115 pips of profits. Moving now to the pound USD. Alright, so of course the pound USD is actually falling like it's raining, and let's see now what we can do next with this pair. Let's move first of all to the weekly chart so we can actually identify the direction on the bigger time frame. Now, as you can see right now, the pound USD is actually approaching here a support level. So that means that at the opening of Monday, we can actually expect from the market to continue the fall for a few more pips before making a pullback. And most likely, we can notice right here that the market has actually failed to break out from that level of resistance exactly right here at 1.23070. Based on the weekly chart, my friends, we had right here a very strong key resistance level, another very strong key resistance level. So since May 2022, the market has actually been trying to break out from that level of a resistance. Then again, July 2022, the market has made another attempt, and lately, November 2022, of course, and recently, this for the last 3 weeks, the market has made another attempt to break out from that level. Now, it seems like the pound USD is indeed struggling to break out from that level. And in my opinion, right now, the pound USD actually has a potential after making the breakout from that level of a support trend line, as we can see right here. The pound USD actually has a potential to continue the fall till it reach the lowest level of the support right here, actually even to this support right here. But however, this is of course gonna be 61.8 if I'm not mistaken. Almost, yeah, 50 retracement. So the pound USD actually has a potential to continue the fall till it reach Fibonacci 50 retracement. But however, for this week, I believe we can continue shorting the pound USD till it reach the absolute lowest level of the support at 1.18614. That means that if we go to the daily chart right now, we can notice right here, of course, the price action. The last two candles on the daily chart, Thursday and Friday, was actually a very strong bearish candles, indicates that the market is going to continue the fall indeed. At this point, I don't see any hope for buying the pound USD. Now, that being said, let's now use the resistance trend line to identify the entry. So as we can see right here, what I'm going to do is simply draw here a resistance trend line from this lower high to this lower low. Lower low, of course, and now what we can do next is simply just like that place the resistance trend lines and check this out. This is, of course, my friends, one of the strategies which I'm offering on my channel called the magic of trend lines. It's totally free. You can watch it on my channel. Just search the magic of trend lines strategy. You will find two videos explaining this style of trading. So we're having here that resistance trend line. Then we can see that the market has indeed respected that level of a resistance trend line multiple times before making here the fake breakout number one and the second fake breakout. Now, if we zoom in, we can notice right here that the market actually facing here a strong key support level. And upon the pressure from that support, the market actually might make a pullback, and that level of a resistance trend line right here and right here and right there is gonna be most likely respected. So of course, let's now move to the 4-hour time frame, and as we can see, that's exactly what I'm talking about. That is the level of the resistance trend line which we are actually going to rely on to find the next entry. Let me just make it more accurate, just like that. Perfect. Of course, on the left side, we can see that we had right here a very strong key resistance level. Let me just be sure it's accurate. I have to be very accurate right here. I'm aligning my horizontal. Yes, that's fine. That's fine. Totally fine. I made sure that the horizontal line is touching the lowest level of the strong key support level, and right here the real level of the support, which was of course previously a real level of a strong resistance, which means we have to wait for the pound USD to rise for about 37 pips before we can start shorting it. If we do that, the target has to be right here, the nearest strong key support level to the entry at 1.19341, which means we are actually aiming 150 pips profit from this signal. Meanwhile, the safe zone is gonna be ranging actually till the highest level of the resistance right here at 1.21825, which means the safe, actually that's quite a lot. That's quite a lot. Let me just be sure. Yeah, look at that. I actually was searching for this resistance trend line right here. Sorry, the key resistance level. We can actually rely on it. And of course, my friends, since we are actually relying on that resistance trend line, we don't actually need to increase the safe zone. I mean, if the market is going to be actually in the first place going to be able to reach the edge of the safe zone, it means that this resistance trend line is no more being respected, and this setup is entirely failed. That being said, the safe zone is going to be ranging for about 60 pips against 154 pips of profit. Moving to the AUD USD. Alright, let's get rid of the old signal again. It's no longer valid for the short at all. Alright, so moving now to the weekly chart. Now, based on the weekly chart, I want you guys to separate the fake breakouts from the real ones. Now, as you can see, right there exactly, we have here the real level of the resistance exactly at 0.69964. This was of course a real level of a resistance, another real level of the resistance right here and right there, and lately the real level of the resistance was right here. Meanwhile, these two attempts actually, yeah, like that. So this was of course a fake breakout, and this was of course another fake breakout. Now that tells us that most likely upon the pressure from the current support right here at 0.69222, we can actually expect a pullback right here, and that level of a real resistance is most likely going to be respected. Now, Of course, on the weekly chart, we cannot identify the exact entry. So let's now move to the daily chart just to make sure that our entry, or actually the direction, is accurate. Now, as we can see, based on the daily chart, we can actually lower the line right here, just like that. Now, as you can see, my friends, this was, of course, a previous strong key support level, which has been broken out from. Meanwhile, the real level of the resistance was right here. But still, we cannot actually identify the exact level where we can start shorting the pair. So therefore, let's now move to the 4-hour time frame. So that's my strategy. Always, the weekly and daily is for the direction. Meanwhile, the 4-hour time frame or even 1-hour time frame is for the entry, if it's just gonna be for the buy or if it's gonna be for the sell. So after confirming the direction on the daily chart and the weekly chart, now moving to the smaller time frame to identify where exactly we can start shorting the pair. And again, I'm going to use the magic of trend lines to find the exact entry. That being said, what I'm going to do is simply draw here the resistance trend line from this higher high to this lower low, or this lower high. What I will do next is simply drag the very same resistance trend line which I have drawn here and place it all the way just like that. Fantastic. Now, as you can see, this was a resistance trend line which has become a support trend line for only one single attempt, and the market has indeed made the bearish breakout. Now pay attention to the wicks. Right here we can see that the market has already retested that level of a resistance trend line, which means if I go to the 1-hour time frame, look at that. That resistance trend line has already been respected. These 3 wicks right here represents the retest of that level, meaning this is of course a resistance trend line number 1. That means selling right here actually might not be so ideal. So what I'm going to do next is simply draw, or actually drag the same resistance trend line and place it right here at the nearest or the next resistance trend line, which is exactly right there. It became also a support trend line for multiple attempts. It was of course a real attempt of a resistance trend line. Again, all of that has been actually explained, explained in the video which I have posted called The Magic of Trend Lines. That being said, my friends, we have to wait for the AUD/USD to rise again for about 34 pips before we can start shorting it. And as you can see right here, we had that very strong key resistance level exactly at 0.69509, and as you can see, it's gonna be a perfect level to start shorting this pair. However, the take profit level is gonna be placed right here at the lowest level of the support at 0.68601, and that means we are actually aiming about 90 pips of profit, and the safe zone is going to be ranging just a little bit above that level of a support level at 0.69939, which means the safe zone is ranging for about 44 pips against 90 pips of profit. Moving now to the USD CAD. Alright, so of course the all signal is no longer valid as well. Let's see now, my friends, what we can do next with the USD CAD. Now, let's move to the weekly chart, and as we can see right here, the market has reversed upon the pressure from that support at 1.32767. And as I'm telling you always, that candle right here, that candle on the weekly chart, once it's being spotted on a support level, especially on the bigger time frame, it usually indicates for a bullish reversal. This is the candle, of course, I'm talking about, and as you can see, indeed that has happened. And right here, the next candle was indeed another blue one, which means that most likely the next candle is gonna be blue as well. Let's just move to the daily chart right now. Now on the daily chart, what we can see right here first thing is that broken level of a resistance trend line. So as you can see, the market has actually been respecting that level of a resistance trend line, then finally has made here the bullish breakout from it. Indicates that the market is most likely gonna continue the rise at least to reach that level of the resistance at 1.36575, which means the USD CAD still has about 260 pips more to go. Of course, that's not going to be our target. Let me just tell you later where is going to be the entry and the target as well. So moving now to the 4-hour time frame. So of course, we have identified the direction based on the daily and weekly chart. Now based on the 4-hour time frame, let's identify our entries. Of course, I had to zoom out like this because the candle here seems a bit messy, and it's just really hard to understand the market with this a lot of candles, which has made a lot of what do you call it, neutral channel. I forgot the word, to be honest, my friends. You know, English is not my native language. I forgot the term. However, let me see right here what we can do next. Now, exactly, that was, my friends, if we look at the zoom out the chart at the lines, we can see clearly that we had here a fake breakout, another fake breakout. Meanwhile, this right here, and this right here, and this right here, and this right here, of course, all of them together were actually a real attempt of a support. Meanwhile, we had here that reversal, which indicates that it was also a resistance level. So let's zoom in right now, and indeed, check this out. The market has already reversed upon the pressure from that previous strong key support level at 1.33572. Which means this is right here as support number 1. What we can do, in my opinion, waiting for the market to fall again to the support number 2, and then we can start buying the USD CAD. Now, that means we have to wait for the market to fall for another 43 pips, and I think that's indeed going to be an convenient entry, and it's going to be actually valid in my opinion. Yes, that's totally fine. And the take profit level is going to be placed just right here at the nearest strong key resistance level to the entry, which means we are aiming approximately 160 pips of profit. Meanwhile, the safe zone shouldn't be ranging lower than this level of a real support right here at 1.32966, which means the safe zone is ranging for about 57 pips against 160 pips of profit. Moving now to the USD/JPY, which was of course very loyal to my analysis, but lately, of course, as we can see, the very strong massive movement for the USD/JPY, which of course has affected the market. This movement, my friends, was due to the unemployment rate news. I'm totally sure about that, because the USD/JPY was the only signal running in profit before the news hit the market. However, let's see now what we can do next with this pair by starting to analyze the weekly chart. Guys, do you remember what I have been telling you for the last 2 weeks? Once we see this candle on the weekly chart and on a support level, it's always a strong indicator for a bullish reversal. That has been happening for the last 2 weeks. For the last 2 weeks, the candles has actually been blue and the market kept rising over and over. I have no idea why I sent a sell order last late week analysis video. I thought maybe the market is going to continue the fall till it reach that level of a support, and then after that it's going to continue the rise. I think this was my own mistake. However, let's see now what we can do next with this pair. Now, based on the daily chart, now we have switched to the daily chart. Now we can see, of course, that level of a resistance trend line has actually been broken out from, indicates that the USD/JPY has one direction to go, which is the upper direction. So most likely, this resistance right there is going to be the next target for the USD/JPY. It was, of course, a previous broken level of a key support level, which means the USD/JPY still has about 180 pips more to go. So the question is, where exactly we can start shorting this pair, buying this pair? Based on the daily chart, we can see right here, exactly right there, my friends, the strong key support level, which has already become a resistance. This was, of course, a strong key support level. That being said, I believe we have to wait for the USD/JPY to fall again, retesting that level of a support trend line, or actually a key support level, before we can start buying the pair, before it starts the rise. But just to confirm the entry, let's move to the 4-hour time frame. Now, based on the 4-hour time frame, we can actually find a different entry that can actually gonna happen after the market fall for about 60 pips. But I want to give you a more accurate entry. There. This, of course, the nearest strong key support level to that bullish breakout candle. So the point here, my friends, is you have to find the bullish breakout candle, then look at the left side to find the nearest strong key support level to that bullish breakout candle. Most likely the reversal is going to occur exactly on the same level. That actually can be seen right there. And if we look at the support trend lines as well, right there, check this out. Now we can see that this is convenient. Now we're having here that support trend line. We had here the fake breakout from that level, and right here we can actually expect from the market to reverse upon the pressure from that resistance at 131.186, and it's gonna make a pullback and respects that level of a support trend line, and plus it's gonna be respecting that level of the support, and afterwards it's gonna continue flying. That being said, we can start buying the USD/JPY at 130.280. And the target, my friends, has to be placed right there exactly at the nearest strong key resistance level at 132.564, which means we're actually aiming approximately 228 pips profit. Meanwhile, the safe zone won't be actually ranging lower than the level of the nearest strong key support level to our entry at 129.185, which means the safe zone is ranging for about 100 pips against 232 pips of profit. And by the way, for the USDJPY, this is absolutely nothing. As we can see, one candle has moved for about 190 pips. Another candle right here moved for about 300 pips. So again, the USDJPY is really worse than the gold nowadays, and this is normal. Moving now to the USDCHF. Alright, so of course, let's delete the old signal for the USDCHF, my friends. It's no longer valid. Let's see now what we can do next in this market. Now, one second, as we can see right here, the USDCHF, my friends, let me just draw it as a zone. That's better. Exactly just like that. So as we can see, the USDCHF has actually formed right here a very strong key support zone, and the market has actually failed multiple times to break out from it. And more importantly is on the weekly chart, we are seeing here my favorite price action. This reversed hammer has appeared on the weekly chart, indicates that the market is getting ready for another bullish reversal. As you can see, indeed, the market has actually made a crazy movement right here, but eventually has closed as a bullish candle, indicates that most likely the next candle is gonna be bullish as well. So moving now to the daily chart, just to confirm if our entry is accurate. Right now, what we can see right here, my friends, is that support trend line, as we can see right here. And as we can see, if I draw here the support trend line, we can notice right here that we had a support trend line, then we had here that fake breakout, and now the market is actually rising. Now, as you can see, we had here multiple attempts of a support trend line, making actually this line here a bit confusing. But if I'm not mistaken, and if we move to the 4-hour time frame, that's indeed the best level. Actually, no, I want to be clear here. I cannot take any risk. Let me just tell you something. So we are having right here that support trend line, just like that. That's actually more convenient. As we can see, we had here that support trend line, which has been which has faced a fake breakout, and lately reversed, facing here the resistance right here as 0.92770, which means we can actually expect a pullback, and that level of a support trend line is most likely going to be respected once more, or once again. That means we have to wait for the USDCHF to fall for about 30 pips before we can start buying it. The question is there any strong key support level on the left side that we can rely on? The answer is absolutely yes, right there. 0.92319. As you can see, my friends, this was a very strong key level, strong key support level. It was a fake breakout right here. However, the market has indeed reversed exactly on that level of a support multiple times. It became also a resistance level, a real level of a resistance, and we had here the fake breakout and another fake breakout. Ignore this drawing here, sorry. Now, as you can see, that level of a support trend line is most likely going to be respected again, and that level of a support will be respected as well. That being said, we can actually continue buying the pair till it reaches the highest level of the nearest strong key resistance level as 0.93595, which means we can actually expect to make approximately 127 pips profit from the signal. Meanwhile, the safe zone is going to be ranging till the absolute lowest level of the strong key support level, which is the nearest one to our entry as 91652, which means the safe zone is ranging for about 66 pips against 127 pips of profit. Let's now move to the gold. Of course, no more valid at all. This buy order, this was so stupid. Let's see now, my friends, what we can do next with the gold. If I'm not mistaken, and hopefully this time I'm not, the gold is actually gonna continue the fall. The gold has been so much overbought right here, and actually it reached the maximum of 1959, and I think that was the maximum at all before it finally reversed and fall back to 1864. As I'm telling you always, the golden rule for the gold. If we are above 1900, we buy. If we are below 1900, we sell, and vice versa. Of course, it depends on the trend direction. But however, currently we are now below 1900, and actually we are approaching 18500. However, the movement right here is really strong bearish movement. So most likely the gold won't stop the fall until it reaches the nearest strong key support level to the entry, which is gonna be right here exactly at 1835.64, which means the gold still has about, I would say, approximately 300 pips more to go before it makes any further bullish movements. However, the gold is also facing right here a strong key support level as well, which was previously a resistance. And keep in mind, I'm still on the daily chart. This was, of course, a resistance, and this was, of course, the nearest strong key support level to that bullish breakout candle. So the gold actually has a potential to make a pullback at the current price. Now, if we look at the left side, however, we can notice right here that we had the nearest strong key resistance level exactly right there at 1886.08. Of course, another way to confirm this entry is by simply draw here a resistance trend line, just like that. And what we will do next is simply drag the very same resistance trend line and place it just right there. Actually, just right there. Now we can see right here that was a strong key resistance trend line, which has also become a support trend line for multiple times before finally make the bearish breakout. Now we can expect a pullback, and that level of the resistance trend line is going to be respected, and that level of a nearest resistance as well is going to be respected as well. And of course, all of that being said on the daily chart. Let's now move to the 4-hour time frame. Now on the 4-hour time frame, we can see clearly that this was, of course, the nearest resistance to that bearish breakout candle, indicates that most likely that is exactly where we can start shorting the gold. Another way to confirm the entry is, of course, by simply draw here a resistance trend line just like that. This was, of course, a resistance trend line, as you can see, which has become already a support trend line, another support trend line before finally make the bearish breakout. Now we can expect from the gold to rise again, retesting that level of the resistance and resistance trend line, and after that it's going to be respecting it and continuing the fall. I think it's a very simple and straightforward analysis for the gold. Let me just now move to the daily chart just to make sure to highlight the take profit level, which is going to be placed exactly right here. You know what? That's going to be a lot of pips. Yeah, 500 pips. I mean, that is so unrealistic and not my style at all. Therefore, the take profit level, my friends, is going to be placed just right there at the nearest resistance to the entry. Of course, I'm totally aware that the gold is really closer to the take profit level than the entry. However, I cannot risk telling you to buy the gold at all at the moment. The gold is definitely going to be bearish. However, we have to wait for the gold to make a correction, or actually, sorry, a pullback for about 200 pips before we can start shorting it, and that's going to pay us back 365 pips of profit. Meanwhile, the safe zone shouldn't actually be ranging higher than this level of a previous support right here at 1905.08, which means the safe zone will be ranging for about 190 pips against 362 pips of profit. So there goes your signal, my friends, for the USD pairs and for the gold for this week. Hopefully this time is going to be so accurate, and hopefully it's going to bring us a lot of profits. So until then, I hope that is informative to you, and I would like to thank you for watching.